Gemini is moving forward with its IPO. We'll look at S-1 highlights and preview what comes next. In IPO Radar news, Databricks surges to a $100 billion valuation, delaying its IPO even further. Welcome to the Access IPOs podcast, where we explore opportunities to invest in the world's most innovative and disruptive pre-IPO companies. I'm Craig Stevens, founder of AccessIPOs.com. The Winklevoss twins are ready to take their Gemini crypto platform public, and these guys have aspired to do this for a long time, and they're very opportunistic guys. We know them from the Facebook days where they saw an opportunity to extract some value out of Facebook. They turned that money around and started Gemini back in the early days of Bitcoin. And now they see Gemini as a bridge to the future of finance, which they think is on the blockchain, as do many entrepreneurs and many VC investors and individual investors. So they now see an opportunity to go public when the public is really hungry for new crypto companies or pure crypto companies. There just aren't a lot of them. There's Coinbase. Circle certainly had a massive IPO. And these guys were talking about IPOing back in early January and February. They filed confidentially for an IPO in March, and that was before Circle went public. Their SEC S-1 filing came out on August 15th. And based on the timing of these filings and IPOs, we expect the Gemini IPO to launch sometime around mid-September. So in today's show, I'm going to walk through the S-1 filing briefly and highlight some of the things that stood out to me as being interesting or unique. Then I'll step through what happens next. If you're interested in investing in the Gemini IPO or just in Gemini stock, what's coming up in the next few weeks and how do you prepare to invest? I'll suggest some IPO dates, and then I'll give you some pointers on how to invest in this deal, how many of the Access Club members are going to be investing in this deal, and then my personal strategy of how I plan to prepare to invest in the Gemini IPO. All right, I'm sharing my screen now showing the Gemini Space Station S-1, and I'm not sure where they came up with that space station part of this. Everyone knows it as Gemini. It's Gemini.com. We do know from the website that Gemini, the name, goes back to the twins, of course. They're the Winklevoss twins. They were able to get that Gemini.com URL. And I guess after they came up with the name Gemini, or they settled on that name, they realized that Gemini was a NASA program that was a bridge to the moon, a bridge to the Apollo program. So it has this dual meaning of the twins, the Winklevoss twins, and this bridge to the moon, or the bridge to the future of finance. And if you're listening on the podcast, I'm sharing my screen. This filing came out August 15th, and there's a lot of blanks in here, and that's how it works. You file for an IPO confidentially, and then they release the filing to the public, and now investors are absorbing this filing. There's financials in here. All the blanks will be filled in at a later time. There's going to be an amended S-1 filing that should come out in September, and a lot of these blanks will fill in. And most notably, the terms will be the number of shares being offered and the initial IPO price range. The stock's going to trade on the Nasdaq under the symbol GEMI. I'm looking at the underwriters here. Goldman Sachs is leading this deal with Citigroup. And what I find sort of funny about this is that Morgan Stanley is not leading this deal. They've been leading a lot of deals as the primary underwriter, and Goldman Sachs has been the secondary underwriter. And Goldman Sachs is above Morgan Stanley. They've pushed it down to the second line, which doesn't seem important to you or me, but there have been filings where the order of these names is really important, especially to these banks. I think it's a little petty sometimes that they make notes in here about the order of the names, but Goldman Sachs is leading this deal, and we prefer a Goldman Sachs deal. Morgan Stanley tends to be a little stingier on their IPO allocations to retail investors. Let's scroll down to some of the key stats. Well, first of all, I'm scrolling through this S-1, and I think it's kind of funny that there's this artwork in here. There's a skier, looks like he's skiing on a moon of Saturn. They talk about how maybe Gemini will be the platform or the banking or the financial platform on Mars when we go to Mars. Kind of silly, this artwork. It's cool artwork, but it's also kind of silly to think that this is the app you're going to be using on Mars whenever we get to Mars, that you'll use their credit card. There's also some pictures of the app. Their mission is to unlock the next era of financial, creative, and personal freedom. Not sure what that means. It's a crypto exchange. There's a credit card to get Bitcoin. Financial makes sense. Creative and personal freedom, I think that's a bit of a stretch, but whatever. It's their marketing department. Of course, the Winklevoss twins are the primary owners of this company. They founded it back in 2014. Cameron and Tyler Winklevoss, 600 employees. And some of these key stats here, the lifetime transacting users, 1.5 million. Custody assets, crypto under custody. This isn't a huge company doing a lot of transactions and a lot of volume. They don't have a lot of customers. In fact, right now, They talk about their transacting users, their monthly transacting users, and it's somewhere around 500,000. So lifetime transacting users is not people who are currently using the app. Maybe they're people that have accounts, but they're not active on the account. Scrolling down a bit, monthly transacting users, we're not seeing a ton of growth there. For the year ended 2024, there were 512,000. The first 6 months of 2025, there were 523,000. Here's another look in a bar chart of the monthly transacting users. So it's a little curious to me that they're highlighting this lifetime transacting users at 1.5 million, but the current monthly users about a third of that. So it starts to bring into some question I have about this company being a growth company. It's a little more stagnant, I think, than some of the other growth companies we've seen. We'll talk a little bit more about that when we get to revenue. They do make a point that credit card users, 58,000. I know a user in the Access Club community who uses the credit card to get Bitcoin rewards. I prefer travel rewards for my credit card spending, but this seems like a decently popular card at 58,000 users. It is an international company, sort of 60 plus global countries. And here's some Mars photos. I guess they aspire to transact on Mars eventually. A bit further down, there's a letter from Cameron and Tyler Winklevoss. Cameron is the president, Tyler is the CEO. And it talks about their discovery of Bitcoin and blockchain and how they saw it as an opportunity to really modernize banking. The example they give, which I think is a very good one, is that if you want to send money from New York to London on a Friday night, it's quicker to board a plane at JFK with a bag of cash than it is to wire money from your bank account. And that's true. And that's what we see with Circle and potentially Tether and other companies who are working on stablecoins and various cryptocurrencies like XRP and certainly Bitcoin, that the international money flow transferring system is really outdated, the SWIFT system. And there's this opportunity to take over with cryptocurrencies. And that's true for stock tokenization as well. You can't trade stocks 24 hours a day, 7 days a week. And so Gemini aspires to be the future of finance, this trend moving away from centralized banking to more decentralized banking. And they saw that years ago when Bitcoin came out. They were investing on Mt. Gox, famously got hacked, but they were buying Bitcoin at $10 a coin. And there was a Wild West feel to things back in the day. It wasn't widely accepted. And so the Winklevoss twins set out to have a better experience than Mt. Gox was, with transparency, security built into their platform. And they felt in order to build that trust, you needed to have a good product, security, licensing, and compliance. So this letter gives a little bit backstory of the company. You can also go to their website. There's a pretty good backstory about how they came up with the name and how they started the business, and then looking ahead where they see finance going. So if you're thinking about investing in this IPO, make sure you read that letter from the Winklevoss twins. I think it's kind of funny here. They say crypto is not just money for humans, it's for robots and AI agents. And crypto is not just money for planet Earth, it's multi-planetary. So they're really looking ahead here and trying to build that story for the future of money over the next several decades. Is that a reason to invest in this IPO or invest today? Probably not, but it might add to some of the hype if there is hype for this deal. These guys are visionary leaders and opportunistic, and so that could lead into a successful IPO. But I do want to emphasize that a lot of this filing is the future, what's going to happen in the future, and not so much what's right now. The Circle IPO, we saw growth today. Figma, we saw growth today. CoreWeave, we saw tremendous growth in AI. And Gemini is a second or third tier player behind, say, Robinhood or Coinbase. And the main red flag in this S-1 filing, if there is one, is slowing revenue growth. In fact, it's negative revenue growth and increased losses. For the 6 months ended June 30th, 2024, revenue was about $74 million. For the 6 months ended June 30th, 2025, it was $68.6 million in revenue. And so if you read through the risks, and these filings always have lots of risks, and they're spelled out, and they kind of cover the kitchen sink to make sure everything is covered. But one of the big ones is the adoption of cryptocurrencies and the regulations and things that are sort of out of their hands. So if things go favorably for Bitcoin and for exchanges like this and global transition from fiat to crypto, and Gemini really stands to benefit from that. But if crypto doesn't continue to gain traction, or if regulations put a damper on Bitcoin and other cryptocurrencies, Gemini could suffer. The year ended 2023 was a net loss. It improved in 2024. But for the 6 months ended June 30th, 2025, we're seeing net losses increase fairly rapidly from last year. And so I expect more information to come out about the losses in the retail roadshow. It's likely they're investing for the future, and you do want to see that. but headed into an IPO. It feels a little early for this company. If their revenue is slowing and their losses are increasing, it might be a little early for them to IPO, or perhaps they've missed an opportunity a couple of years ago. So I'm sharing this very elementary Venn diagram regarding IPOs. And there's these three pieces to it. There's the IPO window, there's the industry that we're talking about the IPO happening in, and then the business health. And so if we're looking at Gemini in the context of this Venn diagram for what would help to make a successful IPO, I think it's fair to say that the IPO window is open, it's favorable. They're in crypto, and that's a trending industry. But the business health may not be as strong as we'd like to see, certainly not at the level that Circle was happening. And we saw Circle's quarterly report come out, the first quarterly report come out, and it was favorable. So this does raise a red flag for me that this IPO may not be as strong as some of the others we've seen, at least from a fundamental standpoint. Now, in terms of crypto hype and not having opportunities to invest in crypto and this being a crypto company, there may be that pop or that enthusiasm for it, especially if Gemini offers IPO shares to their customers, and those customers are loyal and hold on to shares. And of course, it depends on the float, how many shares are out there, and the broader market at the same time. So that brings me to the directed share program. So anytime there's an IPO that's on my radar and the S-1 filing comes out, I always check for this directed share program. And often companies that have a large customer base or user base, they will set aside some shares for their customers. And I should change that. It's not often, but it's sometimes. Sometimes they set aside shares just for family and friends. Uber, for example, set aside shares for drivers. Airbnb set aside shares for hosts. And it's possible here that Gemini customers might get a chance to invest in this IPO. If you look at this directed share program, it says here, at our request, the underwriters have reserved up to blank % of the shares of Class A common stock offered hereby at the initial public offering price to offer to certain individuals and entities. If purchased, they will not be subject to lockup restrictions. So certain individuals and entities, I think that phrase will change when we get the updated S-1 filing. This percentage will fill in, and we'll find out if Gemini customers are going to get a chance to invest in this IPO, and there's going to be a quick turnaround after that. Typically, this number comes in at 5%. Now, the Reddit IPO, it was 8%. They delivered 8% of shares to certain Reddit users. Gemini has about 1.5 million customers, it says, or lifetime transacting users, and 500,000 of those are active investors on a monthly basis. So that's not a huge number. I think there's an opportunity for this company to deliver IPO shares to their customers to allow them to invest in the company, because customers make excellent long-term shareholders. If you love this app and you love the company, then you want to invest in it and you want to hold those shares instead of shares going to a Goldman Sachs client who's going to turn around and flip the shares as soon as they can. So if you are a Gemini customer today, monitor your emails leading into this IPO, especially once the amended filing is released to the public. So when I see an S-1 filing with a directed share program and I have a page on my website for the company, I typically copy the wording and paste it to the website so that any visiting customer who's interested in this IPO can read that. But the main thing is you have to pay attention to your email if you get that, and then follow the instructions to invest in the deal if it happens. For those of us who are not customers, there's still an opportunity to invest in this deal. And we don't always get this, and I don't know why. Sometimes this is in the filing and sometimes it isn't, but what this is saying already is that we currently anticipate that up to a certain percentage of shares of the Class A common stock will be offered to retail investors through Robinhood and SoFi. So this is great news for Robinhood and SoFi investors. Now you can look at some of the past IPOs that have happened recently and the success that some of our members in the Access Club community, or you can go on Twitter and find people who've invested in these deals. When they offer shares through Robinhood and SoFi, you've got to make a larger request in hopes that you get a fraction of your request. Now, if you've flipped shares in the past, or if you're new to IPO investing, you might be disappointed just getting one share. But we have readers and viewers of the show and Access Club members who are getting 20 shares or so, up to 200 shares. I got 20 shares in the last couple deals. If you are not a Robinhood customer or not a SoFi customer and you want to invest in this deal, go open an account right now, go fund your account, make sure that you have money in the account and it's cleared funds so that you're ready to invest in the deal. If you want to buy 10 shares, then I recommend you request 50 to 100 shares so that you can try to get your request filled. Typically, there's a lot of demand on these two platforms. So request big in hopes that you get a fraction of your request, and then follow the flipping rules so that you have access to future IPOs. So this is a bit of a bonus that this statement is in here so we can prepare with getting our cash ready. And then when the terms are updated, the brokers will open up the request, the indication of interest feature within the app so that you can put in your order and then hope to get an allocation the morning of the IPO deal. So what comes next with the Gemini IPO? Well, right now, investors are analyzing the S-1 filing. They're looking at financials, investors like you and me should be reviewing the S-1 filing before we invest in this deal. The underwriters are out gauging interest with institutional investors. And based on that information and proprietary information that they don't share with the world, they're going to come up with an offering. And that is the number of shares that will be offered to the public in this deal. They usually issue new shares, and sometimes they sell shares from existing shareholders. So you might see a fraction of the shares being sold by either the Winklevoss twins or early VC investors or employees. And then they're going to issue some new shares likely to raise funds for future growth. And that's one of the main reasons why companies IPO is to raise money. Once they've gauged interest, they're going to update the filing with an amended S-1 filing that'll hit the SEC feed on my website, or you can go to sec.gov to get the filing. And that'll include the offering, the number of shares, an initial IPO price range. And then a lot of the blanks will just fill in. A lot of blanks right now in the S-1 filing, they'll fill in, especially those directed share program percentages and the Robinhood and SoFi percentage. So we should get more information from that amended filing for the number of shares available to retail. Usually we see 5% in those allocations in most of these filings. Reddit, we saw 8%. And in the bullish IPO, it was 20% that went to retail investors. Now, that wasn't in the S-1 filing. It was disclosed by the CEO the day of the IPO. But the minimum should be around 5% that goes to the directed share program, maybe 5% going to Robinhood and SoFi. If we can get more than that, it would be a big win for retail investors. There will also be information in that filing about the beneficial owners. Primarily, that's the Winklevoss twins, but other investors are listed in the filing, but the details aren't there. When that amended filing is released, and I expect it to be released sometime after Labor Day. If you think back to the Figma IPO, they released the S-1 filing to the public on July 1st, and the IPO happened on the 31st of July. So it took a full month to get from that initial release into the IPO. I think the amended filing came out around the 18th or 19th. So I would expect the filing to come out after Labor Day, possibly that week of Labor Day or that Monday, the 8th. A lot of times the terms are released on Monday and then the IPO happens the following week, usually Tuesday, Wednesday, or Thursday. It's usually about 7 to 10 days after they release the terms of the deal. That kicks off the IPO Roadshow, where we get a little bit more information and a presentation. You go to retailroadshow.com and it's either a PowerPoint presentation or a presentation by the company executives. And around that time, we also figure out what the final IPO date is going to be. So if I'm going to guess when the IPO date is, I'd say the amended terms come out on Monday or Tuesday, the week after Labor Day, so that would be about September 8th. And the IPO would happen either Tuesday, Wednesday, or Thursday the following week. That's around the 17th or 18th of September. Now, this is a Nasdaq deal. There are two other competing IPOs out there that we are expecting in September, and that's StubHub and Klarna. Now, StubHub and Klarna are going to trade on the NYSE, so those two are definitely going to have different IPO dates so they can have their day in the limelight. I think StubHub might be a little further ahead than Klarna. Goldman Sachs is playing a role in all three of these deals. So we expect to see different dates for all three IPOs, but they could be kind of close, or they could be a week apart. Gemini will also be monitoring the broader market. We've seen some weakness in crypto names over the past week. So if market conditions deteriorate, Gemini could put this thing on hold and we won't see the deal happen. I think Gemini is more vulnerable to that than, say, StubHub or Klarna. I think those two are more dead set on moving forward. But if the market conditions deteriorate, any of these could pull their IPOs again. But as long as market conditions hold, I do expect to see Gemini mid-September coming up pretty soon here. So strategy, what's the Gemini IPO investing strategy if you want to invest? Well, first and foremost, if you are a Gemini customer, you may get a chance to invest through this directed share program. Monitor your email the day that the terms are released and that S-1 filing is amended to fill in the blanks. That's the day usually that the brokers will send out the email in a directed share program. Now, in a directed share program, there's usually a partner that administers that deal. And a lot of times it's Fidelity, but sometimes I think Robinhood is now doing it. SoFi is probably doing it as well. I know Click Markets can help facilitate some of that. Since Gemini doesn't have a stock broker, they have to partner with someone else to do this. Now, Gemini has mentioned that they want to do stock tokenization in the future, but they're not doing it now and it's not legal in the US. So there's going to have to be a partner for the directed share program. So if that happens, then expect to have to open up an account, wire money, get your money in there as soon as possible, and move fast. Gemini customers who want to invest in the IPO through the directed share program, again, if it happens, it may not happen, you have to follow the directions and the deadlines. So pay attention to your email, act fast, don't delay. I will be watching Fidelity. Fidelity is my primary broker for mostly all of my investing activities. And when IPOs come out from Fidelity, I try to invest through my IRA. I've got enough money in there that it's eligible for Fidelity IPOs, and I have enough cash in there to make a pretty big request. For the bullish IPO, I requested 600 shares. I got 300, and that was a big win. For the Circle IPO, I think I requested 300, and I got 100. I made some great money on that deal. Another positive thing about Fidelity IPOs is they have a shorter flipping period than some of the other platforms. Fidelity's flipping period is 15 days. Robinhood and SoFi are 30 days. So we already know Robinhood and SoFi are going to get shares of this deal, but if you want to invest in future deals, then you have to abide by those flipping policies. SoFi's policy is a little bit more overbearing in that if you sell after 30 days, you're going to get hit with a $50 fee, or you might get hit with a $50 fee. So I prefer Robinhood because they don't have that $50 fee. And I've been getting shares of Robinhood. So my strategy is going to be to deposit money at Robinhood and put in a bigger request than I've been putting in over the last couple deals. I've been requesting around $5,000. I might bump that to $10,000. But that means I got to deposit more money into that account. I have to have that cash available to make that big request. I'm not as enthusiastic about this deal because going back to that Venn diagram, this is not a growing business. Now, maybe I need to read deeper into the S1 to see why it's not growing, but you want to see revenue growth. You want to see profits growing or losses decreasing over time, and we're not seeing that. So I feel like there's that three-legged stool. Gemini doesn't have that third leg, so it is not a company that I intend to hold for the long term. But if I do get IPO shares, I will hold past the flipping policy date. Other brokers that could get access, Webull, certainly always a candidate. Moomoo got their first deal with the bullish IPO, and I got a couple shares there, and so I've got a Moomoo account. Would like to see them getting more deals as well. And then TradeStation through Click Markets. TradeStation still gets deals quite a bit. They tend to get second-tier deals, and TradeStation is not mentioned in the filing, whereas SoFi and Robinhood are. So if you have an account with Robinhood or SoFi, those are your best bets right now. Fidelity is always a candidate because they get a lot of IPO shares. That's where I'm going to be focusing my largest request. And then since I still have money in Webull, I'll look there and I'll look to Robinhood as well. And I may deposit more money if I feel that this deal has got a lot of heat. If there's a lot of demand. We'll have to gauge what's happening on X in terms of, are people excited about this deal? Is it oversubscribed? We'll look at the IPO roadshow, and then the pricing is very important. But going back to what to expect next, I didn't mention it, but once the terms are updated and we have the IPO date, the IPO will price the night before the IPO date. So you'll get that initial range, they'll narrow the range, they might modify the range, and then the night before the IPO, they price the deal. And sometimes you need to go into your brokerage account to confirm that you want to invest at that price. In fact, I think Fidelity makes you do it every time. Robinhood does if it's outside of the price range. So you always should monitor your brokers the night before the IPO. If you really want to invest in the deal, you might need to confirm your request. So the deal price is the night before, and the stock opens for trading the next day, and it typically takes till about 12 or 1 o'clock, sometimes 2 o'clock, for a high-profile IPO like Gemini to open for trading. Let's move on to IPO Radar news. This is when I highlight news stories from the universe of pre-IPO companies that I monitor in hopes that one day these companies will IPO. I monitor somewhere around 150 to 200 of these on my website at accessipos.com, and I write about a new one every single week. I usually publish that on Tuesday. And these are companies that people want to own, but they can't most of the time because they're private. Sometimes you can invest pre-IPO, but it's easier to just wait for the IPO and invest then. And one of the companies on our IPO wish list, it's been on everyone's wish list for a really long time now, and that's Databricks. Out of the blue, Databricks has raised more money, now at a $100 billion valuation. If you think back to December 2024, they raised $10 billion at a $62 billion valuation. And here we are just 8 months later. They're raising more funds. I didn't catch the number how much they're actually raising. It's probably $1 billion or $2 billion, but they're raising at a $100 billion valuation. That's a great increase for investors, pre-IPO investors. Now, several members of our community have invested in Databricks through the Fundrise Innovation Fund and through the ARK Venture Fund. These two funds have held positions in this company, Databricks, for quite some time. So it's a nice return for those of us who've invested in those funds. It's the easiest way to own this asset class. Companies, startups, growing startups that will eventually IPO someday. I'm sharing my screen now. The Wall Street Journal broke this story, but it quickly spread to everyone else. And I believe there was an interview with the CEO. It says here, Databricks is finalizing a funding round that would value it at $100 billion, a 61% increase from just in December. Now, we're seeing companies like Figma and Circle explode out of the gate, and that's making people question private valuations. And so when you think about the top tier private companies, Databricks comes up on pretty much every one of those lists. The other ones would be SpaceX and Anduril, OpenAI, and Anthropic. But Databricks is certainly one of the pickaxes in this AI movement in terms of just big data and enterprise software. Thrive Capital is set to lead the new round. Thrive is Josh Kushner's his name. He runs that VC fund. Talks a little bit about what Databricks plans to do with the money. It's going to invest some of the new funds into product development, but it's also going to hire AI talent, because that's becoming an expensive endeavor. It says here, Databricks has 9,000 employees. It's going to finish the year having added 3,000 to its headcount. Databricks wasn't planning to fundraise again so soon, but Godsey, the CEO, Ali Godsey, said VCs are knocking on his door to raise funds. He said even 2 months ago that wasn't happening, but I think after this Figma IPO and Circle IPO, people are seeing more value in the private market. So they were knocking on his door, and they decided, well, we're not going to IPO anytime soon, so we might as well raise some funds, bring in some investors, strategic partners possibly, and strengthen the balance sheet. And this is after a $10 billion raise just a few months ago. Databricks, I'm going to guess, is probably profitable or close to profitable. So it doesn't need this money, but it's probably thinking about the AI race and how it's going to need to compete for talent and make massive investments into business endeavors. So it's really thinking about the future. Now, not long after that December fundraise, this is back in February, the CEO told Bloomberg that Databricks would be a public company someday. It's not a question of if, but when. But he reiterated that IPO is not a priority. They want to capture more market share. So back in December, an earlier interview, December 2024, Axios asked CEO why it raised $10 billion instead of IPOing. And CEO said it's dumb to IPO this year in 2024. So we're definitely going to wait. The earliest theoretical possibility of an IPO would be next year, 2025. And then there's lockup periods, so it would just be too long of a period for employees to get liquidity. 2025 is still a possibility, but that would be the earliest. But it could very well happen the year after that. They are following the footsteps of a Stripe and SpaceX of providing liquidity to employees by doing these fundraising activities at $100 billion. They can allow some employees to sell shares to these VC companies, almost acting like a tender offer. But at this size and with so many investors, Databricks is destined to IPO at some point, hopefully in 2026. But every step of the way, Databricks has chosen another route, the private route, raising private funds. If this indeed isn't a new series round, this is Series K. Series J was back in December. This is a Series K. That's a lot of series. Some IPOs happen at the Series C or the Series D. Usually around E or F is when they really start finishing up on the private rounds. But Databricks is ready to go public. It just hasn't yet. And when it does, it's going to be a blockbuster, $100 billion company now, assuming that holds. Now, my fear is that the broader market isn't going to hold. It's not going to keep going up. And if Databricks has raised here at $100 billion and the broader market falls for whatever reason, geopolitical, tariffs, recession, whatever it could be, AI bubble, I fear that having raised now at a $100 billion valuation, they will be afraid to IPO anywhere below that, because that would mean some of their VCs would be underwater. I would have liked to have seen them hold that $60 billion valuation and then IPO at $100 billion or IPO at a $90 or $80 billion valuation, but it's not up to me. Databricks on our IPO wish list looks like it's going to delay even further. It's disappointing, but this is a fun one to watch. And for those of us who have already invested, it's nice to see that jump in the valuation. That's all for IPO Radar news. I think we're in a bit of an August slowdown. A lot of the smaller companies that I'm following just haven't seen a lot of interesting news as of late. There's been a lot of the AI hype type of news and the perplexities and OpenAI and Anthropic and the drama around those companies. And I'm trying to stay away from that kind of news story because it just doesn't really push the path toward an IPO. It's just chatter that most people don't care about. It gets a lot of headlines in the news. So we're looking for a really substantial progress toward IPO for companies on our radar. And we're always looking for new companies on the radar. And I've got, trust me, a backlog of companies I want to write about and analyze to get them under our radar. And it's a matter of just identifying which companies are most interesting to you, my audience, pre-IPO investors, aspiring IPO investors, people who want to own these companies. So if you have any companies that you want me to cover, you're interested in, that are generally above $1 billion in market cap and growing quickly, let me know in the comments below. I'm always interested in hearing about new companies. Good chance it's on my peripheral radar list of companies. Like I've got like a seed list of companies that I'm thinking about writing about, or I may write about. And then I choose from that list when I'm ready to write a new article and share it on the website. That's all for the show. There's a few ways you can support the show if you like what you're seeing. First of all, you can go to my website, accessipos.com, and just sign up for my weekly newsletter. It comes out on Sundays. I send a little reminder that there's a new podcast out there, and I usually highlight what's in the podcast. If you don't have time to listen to it, you'll still get some bullet points on what I talked about. I also share news about upcoming IPOs and any radar news that doesn't make the podcast, and highlights from the Access Club, which is our Patreon. Go to patreon.com/accessipos if you want to up your game and interact with other investors who are investing in these deals. We've got a separate chat for each IPO. So during the bullish IPO, we were in the chat in real time, sharing our allocations, how much everybody got. And there was some cheerleading whenever the stock opened up really high. And I'm also going to be adding new trade alerts to the Access Club. So when I own an IPO company and I end up selling the shares, or if I end up holding the shares, but usually I sell them after the flipping policy, I'm just going to send a little trade alert to the Access Club members to let you know that, hey, I'm selling this one. I'm going to try to lock in some profits or cut my losses. It's just $5 to join the Access Club at the baseline level. Don't forget to subscribe, like, and set your alerts on YouTube or wherever you follow your podcast. Give me a 5-star review if you're on Spotify or Apple. You don't need to write a review or anything. Just tap that 5-star. It really helps me grow the show, grow my audience. Check out links in the description for the things we talked about today if you want to get more information. That's all for the show. Thanks for watching. Thanks for listening, and I'll see you next week. This video is not a recommendation to buy or sell any startups mentioned. Pre-IPO and IPO investing involves significant risk. Conduct due diligence by reading the SEC S-1 filings before participating in IPOs. Do not invest in IPOs with money you cannot afford to lose. Thanks for watching.